right, hey Samantha. So I know we're just kind of getting going here. This is going to be a little bit different because, of course, I don't really have like a formal lecture. It's more or less just it's just going to be a chance for you guys to ask questions. I know that Samantha had talked about going through some of the problems, so we'll make sure we do that. Hey Alex, Marisol, Ryan, and Darshan. But again, the whole idea here, hey Arjun, the whole idea here more is a chance for me to answer questions. It's kind of like we would have done on WebEx, but the nice thing about this is it's going to capture it, so you can go back and review any questions that might have come up after the fact, or of course for people who weren't able to make it during this time. So we'll see how it goes, but hopefully it goes well. So before we get into anything else via the chat, how is the practice statement of cash flows going? I know Darshan mentioned that one issue was kind of going back and forth between the main sheet where it has all your information and your solutions sheets, and that kind of adds time. I'm not sure there's a great way to address that. Sort of the way that I set it up, or the way that Canvas requires that you set up tests, it's pretty, I don't know, picky and fickle. And so kind of the way I set it up, I'd be afraid that I might mess something up if I change the content of the test at this point. So I just want to make sure. But hopefully, I mean, my goal would be that you could finish that in about 45 minutes, give or take. So if it's taking you significantly longer than 45 minutes, then that's a little bit longer than I would have hoped. Hey, Natalia. So the way I'm doing it now, part of the stream is just showing my desktop, but I have like two screens going. So and so as we get into it, I'll just kind of navigate through things on the desktop, and we'll kind of go from there. But again, let's kind of. I know there were probably some questions about some of the other practice problems, and so I'm going to pull up the practice problem, and simultaneously I'm going to pull up the actual question. Let's kind of go through here. Hey Tammy. Let's see, practice problems. All right, so I think we had gone through the first three on the other lecture, and so I'm just going to kind of walk through the last two, just because these are the two that we didn't cover last time. So Samantha said she hasn't done the practice yet. Yeah. You can cover your webcam for the practice test. That's fine. So I don't need to see you taking the practice test. I'm not even checking it. It's just more, that's a tool for you to use. So that's a good question. So no need, once it gets going, you can cover the webcam. I know you need it to kind of initially set it up. Again, that's just my effort to get you used to it. All that to say, and again, as questions come up, feel free to ask. But for now, I think what we'll do is we'll kind of walk through the solution here to these last two Chapter 22 problems. One deals with inventory, and the other deals with accounts receivable. I'm guessing accounts receivable, if either of them are going to be a challenge, that's probably the one. But we'll walk through both. So let's jump over to the solutions. All right. So with the inventory, I think there's, in the original solution, hey Joyce, in the original, hey Lily, I think with the original solution there may have been a misstatement somewhere in here. I don't remember. I know I've made a few changes here and there, but let's just kind of walk through the solution as it is. So basically, going back to the problem itself, it says they've been operating since January 1st, 2018, and then in 2019 they discovered that it failed to include $500 in inventory in its inventory count each year of its operations. Now in this case, of course, there's only 1 year, so it's not a big deal. But they did discover that they missed that in their count. And so when we think about the solution, the ending inventory from 2018, it needs to increase. And so my inventory balance, if I missed that count, it means there's $500 more of inventory. And part of the intuition for this particular problem that some students might find a little bit challenging is that if it wasn't counted in the inventory, then it would have been mistakenly included in cost of goods sold. In other words, it didn't just disappear, because the way things work is you have your beginning inventory, you record all the purchases that you make, and then you do an ending inventory account or ending inventory count, and that together gives you your cost of goods sold. And so in this case, if they missed it in the ending inventory count, then it would have been accidentally included in cost of goods sold. And so that means that cost of goods sold in 2018 was overstated. And since cost of goods sold is an expense, the other side of the effect of the inventory count is that retained earnings also needs to increase by $500. And so the debit is the increase to the inventory account for $500, and then the credit is an increase to retained earnings. Again, the reason why it's to retained earnings is because cost of goods sold had already been closed at the end of the year. So the only account left is that permanent retained earnings account. And then I don't really have full financial statements when I created these solutions, just honestly because it's a little bit of a pain. But what you'd kind of, in the framework we had been using before, if you kind of think about, revenues, expenses, assets, liabilities, and equity, let's kind of walk through each of those kind of in turn. And so revenues, there's no effect. The way I count my inventory doesn't change what I record as revenues, but of course I would need to restate my cost of goods sold, and that cost of goods sold number was overstated by $500, so the restated amount would be $500 less. And of course then that would have a flow through on net income. And on the balance sheet, of course, we need to increase inventory. Hold on one second, Jack, and then I'll answer your question. By the way, hi, Jack. And then also increase retained earnings. So will always affect cost of goods sold. So if let's see, there could be a situation where it might not. Let's say, for example, I forgot to record the purchase and also forgot to include it in the inventory count itself. It'd be like it never happened. And so in that case, there's actually there's no effect on, I'm trying to think, I don't think there would be an effect on cost of goods sold because I didn't increase the account balance by the purchase. And so I think it'd be okay for cost of goods sold in that particular case. The vast majority of the time, though, when you're doing an inventory count or an inventory count, usually the purchase was recorded. It's not like we just missed it altogether. It's usually a situation where either something's in transit or there's just different things that can happen where you may miss it in your count, or just a mistake was made. So, but for the problems that we might have on a test, assume everything else is done correctly. So I'm always going to be very specific about the error that was made. And so just don't read more into it. If it just says we missed it from the ending inventory count, it means it was missing from the ending inventory count. But that's a good question, Jack. Any other questions on the inventory before we move to the receivables? And again, I think the receivables probably is where a bigger challenge probably sits. Okay. Okay, accounts receivable. So let me go back to the problem, or let me go back to the problem now. So Samantha, on the test, can we just include a summary of the changes to accounts like the problem? It will be, it's going to be in the format similar to the way I did it in the last lecture. So when I did that live lecture and we went through the solutions, we had sort of revenues, expenses, asset. That's how it's going to be on the test as well. It's going to be, for that particular kind of problem, there's going to be a blank, and you're just going to kind of type in the number that fills in the blank. So it wouldn't say $500 decrease. You're going to provide the restated amount. All right, so 49er company starts operations on January 1st, 2018. They failed to report $2,800 in accounts receivable as part of its 2018 financial statements, and similarly failed to report $4,200 in 2019, and they discovered the mistake on March 15th, 2020. One thing that came up, so we had a WebEx session last week that discussed this problem, I think. There might have only been 3 or 4 people on it, so I know the vast majority of you that are on right now probably aren't aware or haven't thought too much about this. But I think if you make a mistake on this kind of problem, or if you're struggling to understand something on this problem, it's probably how to handle sort of the 2 years together. I think most students, if it was just 1 year, could probably make sense of it. This problem, I think the challenge is that there are 2 years. And so I want to talk about the 2018 accounts receivable, because I think understanding what happened to that particular balance is really important. So let's kind of think of it twofold. Let's say in the one hand, let's say we had 2,800 outstanding at the end of 2018. And let's say that 2,800 was actually never collected. Let's kind of take that example, like never collected. Well, if it was never collected, then in my count at the end of 2019, that 2,800 would be part of the 4,200. In other words, it would have accumulated it. So if they didn't report the receivable in 2018 and it never got collected, then it's also not going to be reported in the 2019 balance. And so the total mistake there is 4,200 over the 2 years. And then if it was never collected, 2,800 of the 4,200 in 2019 would be left over from 2018, so it kind of accumulates. But let's also think about a situation where the 2,800 actually was collected. So those are kind of the two situations: either it was or was not collected. And so let's say that it actually was collected. Well, then you have a mistake in 2018, because you should have had revenue recorded that year. And then in 2019, you have revenue of 2,800 that was recorded that should not have been. And so there's sort of like this twofold or kind of two-step effect that the 2,800 kind of is in the wrong year. And so the revenue sort of, again, the idea is that 4,200, even if it had been collected, you have to kind of undo the mistake from 2018 as part of your correction to 2019. And so sort of what the whole point is, sort of the net mistake or the incremental error in 2019 is only 1,400. It's the 4,200 minus 2,800, and it doesn't matter whether or not the receivable from 2018 was collected or not. It doesn't matter, because if it was collected, then there's like that sort of undoing, right? I have to kind of like shift it back over to 2018. So no matter what, the 2019 error kind of includes any residual effects from 2018. And the whole point here is the balance sheet kind of accumulates the effect almost no matter what happened. And so I want to kind of make that clear when I jump to the solution. Hopefully it makes a little more sense. And so let's talk about the accounts receivable. So the error in 2018 would have been counterbalanced by the 2019 accounts receivable balance. Again, the idea here is that any mistake that happened in 2018, whether it was corrected or not, is sort of counterbalanced, or it's corrected in part by whatever our ending balance is in 2019. And so the only change to the accounts receivable account that I need to make is whatever outstanding balance I have at the end of 2019. So if the 2018 is still outstanding, then it's included in the 4,200. And if it had been collected, then there's nothing to worry about anyway. So no matter what, that 2018 balance is not an additional part of this entry. The total entry amount is 4,200. So I need to increase my accounts receivable by 4,200 again, because it accumulates in that account. Now the sales revenue is a little is kind of similar in that the 2018 error would have been counterbalanced. Again, if I had collected it, then I would have just recorded it in 2019 rather than in 2018. And so the total revenue over the 2 years is okay. And since the total revenue is okay, there's really no correction to the retained earnings from the 2018 error. However, with the 2019 error, that has yet to be corrected. Again, assuming that none of that has been collected up to date, then we do need to make a correction there. So Lily asked, so to be clear, 2019 specifically only had a mistake of 4,200. Yes, so the 4,200 mistake in 2019 it accumulates the 2018 effect, or it's been counterbalanced, or the 2018 has to be counterbalanced, or the 2018 would have been counterbalanced. So again, like kind of understanding that 2018 kind of either went away or it's included in the 2019 balance. And then Zuli asks, why do we restate each year on the financial statement, but we counterbalance? Because that is, whenever there's an error, you have to restate. So we know that revenue was wrong in 2018. So we still have to go back and restate it, even though the cumulative effect has been taken care of. And so that's kind of the difference. There's the journal entry piece, and then there's the actual, what do I need to do with my financial statements? And those are two different things. So a restatement is a correction of any error, even if it didn't require a journal entry. Whereas with the journal entry, we're only wondering, okay, is there an error in our account balances that we still need to correct? So Samantha, yeah, again, we have to reissue financial statements. Yes, Samantha, yep, that's correct. Yeah. So we have a not newspaper, but it'd have to be there'd be a 10-4. There'd have to be their 10K would have to be issued. And then Arjun asks, how do we know that the problem state is going to be counterbalanced? You don't know. So you have to understand the accounting. That's the challenge with these problems, is you have to really understand what's going on underlying all of that accounting. And so there are certain things that tend to get counterbalanced, like inventory counts and receivables, and then there are other things that don't. Like if I leave out, let's say that I forget a residual value in depreciation, well, that's a problem. That doesn't get counterbalanced. Or if I have a premium on my bond payable and I fail to amortize it, well, that doesn't get corrected. And so just to kind of understand that. And then Zuli asks, how does something get counterbalanced over a 2-year period instead of one? I'm not sure what that means. I think what you mean is, is there anything that would, let's say, be wrong for 2 years and then get corrected in a third year? I mean, it could happen. Most errors get counterbalanced within a year, though. So like inventory counts tend to correct themselves because you do that every year. I'm trying to think if there'd be an example where you'd have an error for 2 years and then correct it in the third. Not off the top of my head. 2 periods. Well, what they mean by, you have the current period and then the next period. So you have the period where there's a mistake, and then they have the subsequent period. So there are 2 periods that are wrong, but together they're right, if that makes any kind of sense. So even like the case of the inventory, the cost of goods sold would have been corrected in the second year. By doing a correct inventory count at the end of 2019. I think that's what they mean. So 2 periods to correct. So period of the mistake, and then the second period to correct the mistake. All right, let's continue down. And so that gets us the entry amount for the retained earnings. Again, because where's this $4,200? This $4,200 receivable still outstanding that should have been reported, and so that would be the credit to retained earnings. Now I want to kind of highlight the fact that with the retained earnings account, there's sort of 2 things that are going to affect that account. There's the effect from sales revenue, but if you look down below, there's also the effect from the income tax expense. And so if you remember from the last lecture, I talked about the balance sheet item, in this case like the receivable, that has the full effect from the error, whereas I said, retained earnings is the after-tax effect and the deferred tax liability is the tax effect. And what we're doing here is we're just showing you the after-tax effect in 2 steps. And so you have the retained earnings increase due to the sales revenue, but you also have the retained earnings decrease due to the higher income tax expense. So these 2 items together give you the these 2 items together are what give you the after-tax effect, just to kind of highlight that to you. And so let's kind of jump down to the deferred tax liability. Again, we know that this should reflect the tax effect from the 2019 accounts receivable, again, because that's the total amount of income that would have been reported under U.S. GAAP that had not yet been reported under the Internal Revenue Code. And so the tax effect, of course, you just take that receivable, multiply it by the tax rate of 40%, and so that deferred tax liability needs to be credited $1,680. And so again, we have sort of three things to this point, and then finally, sort of to get you to that after-tax effect from the income tax expense, we know that the DTL would also result in an increase in income tax expense each year. The 2018 error is counterbalanced, but the 2019 is not. And so there's this cumulative effect that's still attributable to the 2019 accounts receivable. And so that retained earnings amount, there would be an additional income tax expense that should have been recorded. Again, this would be the accumulation of income tax expense over the 2 years that should have been recorded, an additional $1,680. But of course, the income tax expense account has been closed, and so that entry amount needs to go to retained earnings. And so together, then that hopefully gets us there. So Lily, can you talk through why we have to fix all those accounts, like how AR affects the other accounts? So whenever you have a receivable that should have been recorded, at a minimum, there always needs to be one other account, at a very minimum. And so we know, because the balance sheet has to balance, right? So if I put another $4,200 of receivables onto my books, well, it's got to show up somewhere else. And so in this case, that other place is retained earnings, sort of through the idea of that, well, that's sales revenue that I should have recorded. The thing that makes this problem more complicated is that we're not ignoring tax effects. And since there's a difference, since there's an effect on income, there is an effect on income tax. And also because under the Internal Revenue Code, we don't record receivables until they're collected, there's this additional problem in that we have a deferred tax liability associated with this as well. And so part of the challenge, if you're not ignoring tax effects, is you have to always be thinking, is there a deferred tax liability or deferred tax asset associated with this error? And if there is, what correction do I need to make to that account? Now, I will say on the test, I have some where you have to include all of these things, and I have some that don't. And so there will be sort of easy versions of this, and there will be some more difficult ones. And so it's going to be a mixture for sure. But again, in this particular case, at the end of the day, when you get to the journal entry, essentially the accounts receivable gives you the full effect, the retained earnings gives you the after-tax effect, and the deferred tax liability gives you the tax effect from the error. Again, the reason why there is a deferred tax liability is, again, because there is a temporary difference between the Internal Revenue Code and U.S. GAAP. Hopefully that makes sense. All right. I'll wait for a second here. There may be a few more questions before we get to the financial statements. All right. So we have restated amounts on 12/31/2020. All right, all years must be restated because this is an error. And what I mean by that is whenever there's an accounting error, remember, you have to go back to any time that mistake showed up, you have to go back and you have to correct it. And so even if we had discovered this mistake 20 years from now, technically speaking, they have to go back and fix it if it's material. And so sometimes you might conclude the longer an error sort of lingered out there, it becomes sort of immaterial at some point. But again, the idea here is we have to restate everything. All right, so let's talk about sales revenue. So again, on the test, the framework would be because this one actually includes an income tax effect, I'd have revenues, other expenses, and income tax expense as our three options. And then on the balance sheet, there'd be, total assets, total liabilities, deferred tax liability, and then equity. And so it would be a little bit different. So Arjun's asks, which document, PowerPoint chapter 2, most accurately represents the format of the financial statement questions that we will see on the test? It's the live lecture problem that we did. That's the one. So the PowerPoint associated with the live lecture where we went through the first three practice problems, that's the one that's most similar to the format you're going to have to be familiar with for the test. All right, so let's talk about sales revenue. So, of course, in 2018, we didn't record the receivable, and so we'd have to increase our sales revenue by 2,800, or total revenue, if you want to think about it that way, all revenues. But again, this is probably where the mistake is most commonly made, is this $1,400 increase in 2019. And again, there's sort of two things. I kind of wrote this in a way assuming the $2,800 receivable was collected. But it would be a similar issue even if it hadn't been. But the idea here is that you have this $4,200 in receivables that should have been recorded in 2019 that was not. But if it had been collected, I would have recorded $2,800 from that 2018 receivable that should not have been. And so there's like this net effect. There's the increase of $4,200 minus the decrease of $2,800. And so the net increase in 2019 in sales revenue would be $1,400. But again, even if the $2,800 had not been collected, that just means that the $4,200 already includes $2,800 from the mistake in 2018. So no matter how you want to kind of look at it, in 2019, there's only the $1,400 increase in sales revenue because that's the incremental error that's attributable to 2019. Kind of similarly in 2000 for income tax expense, the income tax expense is going to reflect the change in the income tax expense is going to reflect the change in revenue, and so it's the tax effect from that. So of course 40% of 2,800 is 1,120, and 40% of 1,400 is 560, and so that's why we have an income tax expense increase in both years. And that should say, by the way, instead of 2018, that's just me being lazy with my cutting and pasting. That should be 2019. And of course, the net income is the increase in sales revenue less the increase in the income tax expense. And so in 2018, this 1,680 is the after-tax effect from the sales revenue. And so we have the 2,800 minus 1,120 gives us 1,680 in 2018. And then similarly, we have the 1,400 minus the 560 gives us 840 net increase in net income. Again, for the test though, you're going to be responsible for total revenue, other expenses, and income tax expense separately. But I'm just sort of illustrating what happens to net income here. All right, accounts receivable. Hopefully that makes sense. The 2,800 increase in 2018 and the $4,200 increase in 2019. Again, whether the 2,800 in 2018 had been collected or not, the total effect over the 2 years is 4,200 in 2019, and so that's why we need to increase that. And the deferred tax liability, again, this is going to accumulate the tax effect, and so we have the initial 1,120 plus the 560 gives us 1,680 in 2019. It's accumulating the effect over both years. And then with retained earnings, we're accumulating the after-tax effect, and so the 1,680 plus the 2,520. But notice in all three of these accounts, it's the accumulated effect, the full effect for accounts receivable, the tax effect for deferred tax liability, and the after-tax effect for retained earnings. And notice then that the accumulated effect is what finds its way into the journal entry. Again, that's the 4,200, the 1,680, and the 2,520. So again, looking up at the journal entry, that's where we get all those numbers. But again, that's probably the one, if you were going to get a little bit hung up, that's probably the one where that would have happened. Now, I hadn't really planned on going through another full statement of cash flows or anything like that. Again, we did that full live lecture last time on it. I don't necessarily want to go through that same example, but if there is a particular one that you struggled with, or a particular calculation, I can try to kind of pull it up and see what we've got. But I feel like with the statement of cash flows, that's more of just practice. Just practice, practice, practice. But I'm going to give it a few minutes in case there are any more questions. So again, the format generally, we have that statement of cash flows. Make sure you work on that. Make sure you practice that. Where students make the most common mistakes on the test. So with the statement of cash flows, I mean, typically where they get hung up is in the investing section, because that's kind of where the puzzle has to come together. So most students get the operating section pretty well. It's really that investing section, I think, where students struggle with, because each puzzle is a little bit different. Sometimes they get a little hung up. And so Lily asks about the format of the. Are you talking about the format of the statement of cash flows or the format of the test? There will not be, Zuli, there won't be any multiple choice from Chapter 23. And there won't be any IFRS versus GAAP. Should we expect situations, some other practice problems? Yes. So as far as, the whole idea here is, what I'm trying to do is give you enough different examples. It's kind of that level. The leases, I mean, that'd be on the more challenging end. I'm not going to have a bunch that are that challenging, or even with these receivables, I'm not going to have a bunch with. There's going to be a mixture. There might be one challenging one, and then for Chapter 22, and then several others that are much more straightforward, much easier. So there's going to be a mixture there for sure. Jack says, account names you haven't seen. No, it's going to be basic. Do you have to say cash received or cash paid? I would, just to be very clear. I mean, if you just say cash, that could be confusing. So I would just make sure it's very clear, like this is the cash that I received from selling, or cash received from the purchase or for the sale of equipment, cash paid for the purchase of equipment, something like that. I'm not overly picky, just because GAAP isn't prescriptive, and so as long as it's clear, that's going to be fine. For the direct method, does it matter if we say? Well, remember, for the direct method for the test, just to be clear, for the direct method, you're only going to produce the operating section. And the reason why I'm not having you reproduce the whole thing is because the investing and financing sections are the exact same as the indirect method. So there's no change, there's no difference there whatsoever. The only difference is in how we present the operating section. And so if you type cash issuance and all that stuff, well, that's you don't have to worry about it. It's the same as you would do for the indirect method, but again, for the test, you only have to reproduce the operating section using the direct method. And then Samantha, there are a couple. Yeah, email me about the homework for sure. That's something we can handle over email. And if not, we can always do like you can take one of my WebEx appointments for tomorrow. I think there's still some available. Oh, for the indirect, cash issuance of bond. Oh, whether you say bond or bond payable, yeah, I'm not too worried about that. I mean, technically it's a bond payable, but that's no, it's not the end of the world. Any other questions? When we add the significant non-cash transactions to the end of the statement of cash flows, we should just be looking for the Yes, absolutely. So there's additional information, and so please make sure. Yeah, I mean, there's not going to be 10 of them, right? There's going to be a couple, and so just identify those few items. Make sure you write them in there, and you'll be fine. And Ryan, I think, had also asked about. I think in my one example, I had cash payments for interest and cash payments for taxes as a separate disclosure. For the test, when you have the indirect method, you kind of have the operating section, you have the investing section, and then you have the financing section, then you have the change in cash, and then sometimes companies will provide cash payment for interest and cash payment for taxes as a separate disclosure. For the test, you do not have to provide that. I was just simply providing an example because companies more and more are doing this, and so that's just more or less, it's about just showing you something that companies are doing. And then Natalia asked, did you already say how much time? So right now it's 105 minutes. I don't know that I need to add a lot of time. If I do add some time, it's just going to be a few minutes, maybe 5-10 minutes at the most. And the reason why is because it is open note, I feel like you'll be a little more comfortable, and hopefully that alleviates some of the stress. And I think with the practice on the statement of cash flows, you've gotten over the hump a little bit with using that. But again, it's one of those things that I'm not 100%. So also I saw a question about a practice test before I got on. Is there one? Yes. So there's a practice test for the statement of cash flows on Canvas, and so it's just like the test will be itself. And so you go in, you have to do the lockdown browser, you do the monitoring, all that kind of stuff, and then it will zip you back into a spreadsheet type tool as part of your solution. So you manipulate that spreadsheet and then you submit it, and there's a way to like copy and paste it tells you exactly how to copy and paste it in there. So hopefully that will help. It took me close to an hour to produce the entire statement of cash flows using the indirect method in the operating section. Okay, so yeah, it sounds like yeah, an hour is probably not bad, especially if you're talking to, if you've done it 4 times and it's still taking you an hour, then that's probably a little slow. But I would guess if you did this again, you'd probably be under 45 minutes. And again, in my mind, that section of the test is about 45 minutes. Just ballparking it. And even if you took an hour, it still leaves you 45 minutes to do the Chapter 22 stuff, and it does not take 45 minutes to do the Chapter 22 stuff. When I gave this test in class, many students finished under an hour. It was crazy how many finished under an hour. So I think it'll be okay. Again, if I add time, it won't be a ton. It's that whole debate of the too much time versus not enough time, looking everything up versus knowing it. It's just all how they work using the keyboard over the mouse. Oh yeah. That's good advice, Arjun. Being able to kind of navigate through that without relying on your mouse. It's good advice. Again, it's I think with some practice you'll be more comfortable. For me, it's way better than the open text box stuff. I can't imagine doing a statement of cash flow with that. That would not be possible. And so I think it will be helpful. Yeah, so you got to really pay attention to the buttons. So you don't want to delete or clear all of your work accidentally, because there's really no backup, I don't think, unless you've been constantly saving. I think if you constantly hit that save, I think it kind of has it pasted in the background. So that'd be the other thing. I think that tab, every time you hit the button inside of there, it says click here to submit your work or copy your work, and so then it gives you a copy to a link, and so it's still sitting there until you overwrite it. So it should be okay. See, any other questions before we get going? All right, everybody. Can you tell us how to transfer the link from our work and paste it correctly? So the issue for that is the only way that I can demonstrate that, even on my computer, is by enabling the lockdown browser, and I don't think that I can stream while the lockdown browser is operating. So I don't think I can show that. I couldn't even show it on WebEx. I don't think there's anything that I can do. Yeah, Natalia has it exactly right. You just click the save and then it's Control-V and you're good. Is there information pasted in the question that is not transferred in the Excel? No, I pasted everything from the problem into the Excel spreadsheet, including the additional information, so you didn't have to go back at all. See if there's any more questions here. All right, so just so you know, obviously Thursday there won't be a live stream because of the test. Um, Next Tuesday, so what I'm doing, just what I'm preparing now, is for Tuesday and Thursday of next week at a minimum. I don't know if we'll go into the next Tuesday, but for sure the Tuesday and Thursday, I'm preparing like what I call a comprehensive review lecture. And so what I'm doing is I'm just going through every chapter and we're hitting highlights and we're just, hey, remember this from chapter 13, remember this from chapter 14, remember this from chapter 15, just kind of walking you through that quickly, just sort of to kind of get your brain back engaged. And also it's a chance, when we do the live stream, it'll be a chance for you to have your notes out and sort of say, hey, what about this, what about this? And honestly, I'm going to be pretty transparent about things that I don't think are important. So for an example, if we go back to chapter 13, like there might be some detail about, what's an example of something like, where you accrue wage expense because of vacation days. Like, I'm not going to have a question on the final exam because in my mind that's a very detail-oriented question. And so the comprehensive review lecture is meant to kind of focus your attention so that you can, I think, better prepare for a comprehensive final exam. So normally what I would have done is we would have had a 3-hour session on the study day, and we would have gone through everything and just allowed you to look at all your tests and things like that and review on your own. Since we don't have that as an opportunity, I'm just going to substitute this lecture for that. And so hopefully that'll be helpful. So Natalia, so that's open with lockdown browser, it'll be sending you multiple alerts. It will, but that's okay. So what ends up happening is if you're looking through your notes, the way that it just basically says they're not looking as much as they should be, and it just highlights it. And all I do is there's a video, and I just go in and I see what you're doing. And honestly, what happened last time is the few times that it really highlighted an issue, I was able to look on the video and I felt comfortable. So I wouldn't worry about that because it's not going to kick you out or anything like that. It'll just send me an alert, and I'll review the video after the fact, but it won't be a big deal. Will the final be open question? It'll be a mixture. So Joyce, it will be a mixture. So it's about, I want to say half and half. So about 50% of the points are multiple choice, and about 50% of the points will be short answer, short workout, computation kinds of questions. There aren't going to be like long comprehensive problems just because that's not practical. I think the biggest problem might have like 3 journal entries at the most. It's just not going to be the bigger one. Open notes on the final. These are real. Yeah. It is funny. I don't know how to explain it. It is. You'd be shocked at how much we as faculty are handling things differently, person to person. I think there's kind of extremes. There are some people that like, hey, I'm doing it the same as I've always done it, and I don't care if it's online or whatever. It's just the way that I'm going to do it. And then I think there are other people that's like the wild, wild west, like whatever. I don't care at this point. I think I'm somewhere in the middle. I mean, I'm definitely allowing a lot more than I normally would, but I think given the situation and that you're learning all this stuff online and all these things, and it's difficult to monitor it, because honestly, ultimately, here's what's going to happen. Here's what I think is going to happen. I'll say that. I think that students will, on average, do better, but that just means the curve will go away. So normally speaking, on the final exam, if somebody got 145 out of 50, that was a phenomenal score. And then I think a lot of people would get like 140 and below. Scoring above 140 on the final without a curve is tough to do. I think since it's going to be open note, I think a lot of people will probably score above 140. And normally I have about a 10-point curve on the final. I'm guessing this one might have a 3 or 4-point curve. And so it's just going to kind of shift the curve. It's not going to shift grades. That's my personal take. I could be wrong, but I think that's what's going to happen. Anything else before we close out? Again, I know there's a little bit of a lag, so I'm going to give it a second. So Carolina, how you calculate the equipment account analysis balance. So let me see. All right, let's go to the equipment. All right, see you later, Lily. Let me see here. So the equipment account analysis. All right. All right, so that was the land. Let me go back to the equipment. All right, so of course we have all this additional information that relates to the equipment. And we're just going to kind of walk through it again. We'll just kind of basically walk through it from scratch. And so, of course, you start with the beginning balance in the equipment account, which comes from the balance sheet. And then we are told in the additional information that they reserved $25 on January 1st for equipment that it sold. The equipment sold had accumulated depreciation of $40. Now, in this case, I accidentally put the cost in first. Totally my mistake. What I should have done is started with the equipment sale information down at the bottom and then go from there. So the cash that they received was $25, and then we had a gain on the sale of $20. And so that information together tells us that the book value from the equipment that we sold must have been $5 if we received $25 cash. And if there's a gain of $20, that means the book value on the equipment must have been $5 when it was sold. Given that there's accumulated depreciation of $40, that must mean that the cost from the equipment was $45. Now, when you talk about the equipment account, remember everything inside of that account is based on cost. And so when we sell equipment, it's going to reflect the cost, not the other one. So Zuli asks about the equipment depreciation. You're right, you didn't need that information. It was completely unnecessary. All right. We're also told in the additional information that we purchased some equipment using a note of $35. And so given all that information, we had $165 at the beginning. We sold equipment that had a cost of $45, and we purchased some equipment with a note that tells us that if this is all that happened, the equipment account balance should be $155. But in reality, the balance was $210. And so given that the actual balance is $210, the only thing that would explain that difference was the $55. And that would be the cash purchase. Yeah, the depreciation is that again, that was just extra information. Sometimes when I'm building these questions out, I intend to do one thing and then I kind of do something else for the puzzle, and then I leave in information that I probably should have gotten rid of. And that's one of those situations. Good, I'm glad it was helpful. Any other questions? No problem, Natalia. Yep. And anybody else, if you have any questions, just email me, and I should be able to answer it. Again, I do have a WebEx session tomorrow. I forget the exact time. I think it was oh, you know what? No, I don't. I'm trying to think. Let me just ask. Let's kind of, let me see what I've got. I don't remember. This is one where you probably all know a lot better than I do what I have on the schedule. I don't remember if I have an open WebEx session tomorrow or if I just had individual appointments. I know for sure I have individual appointments, but let me see. Okay, yeah, so just individual appointments tomorrow. If enough of you email me and want an open session, I can add one. But unless I get a bunch of emails asking for one, I'm just going to leave because the individual appointments I don't even think are full yet. So yeah, so there's even room there if you want to do individual appointments, and that can be multiple people. I can do that as well. All right, everyone. Thank you so much. Have a great day. Enjoy the sunshine if you can, and I'll talk to you soon.